March 2025 saw a slowing in the rate of increase of the median sales price of single-family homes in Sacramento County. Usually what we've been seeing is the increase has been, like last month, it was about 3%. Well, in March, it was 2%. And to stay to the very end, because at the end I'm going to show you what I mean by the slowing of the rate. And you can see year over year how we're starting to kind of like level off on the median sales price of single family homes. The number of units that were sold so low, so I can't believe it's like almost 800 single family home sales in Sacramento County. And the inventory, however, is increasing quite a bit every single month. That, for the past few months has been going up by 40-50%. In March 2025 is no exception. March 2025, the inventory, which means the available single family homes on the market, increased by about 40%. So stay to the very end, because I'm going to show you also not only the rate of the increase in median sales price and how the rate is starting to level off and slow down a little bit, but I'm also going to show you what it looks like to have a buyer's market compared to a seller's market. We're going to look at the absorption rate, and we're going to see like the difference between the two of them. So stay to the very end and let's do the numbers. This shows a comparison of March of 2024 to March of 2025 of single-family homes sales in Sacramento County. So in March of 2024, the median sales price was $550,000. In March of 2025, it was $560,000. And that represents about a 2% increase, which is actually slowing down a little bit from what we've seen in the past. So I'll show you in a graphical presentation what that looks like. The number of single-family homes sold is still really low. Look at this. It's only 832 in 2024, and it went down in 2025. It was 821. The sold to list price, I do the averages here. Sometimes you might hear the median sold to list price, but I do the averages because there's really not that much variability in the data. And it still remains about 100%. People are having to decrease the price of the house in order to get it sold. They're usually getting what they ask for. Average days on the market increase from 27 days to 33 days. And the number of listings taken increased slightly. This is the number of contracts that were signed that get posted onto the MLS. It increased by about 8%. But the main story here is the availability on the market. Now, these are the houses that haven't sold the previous month that roll over into the month of March. So it increased by close to 40%. And this shows how many houses had to have their prices dropped in order to get them to sell. So what I'm going to show you here is the rate in the median sales price. So this shows you March 2023, March 2024, and March 2025. So this is what I mean by the rate slowing down. You see how boom, 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 it goes up pretty steep from March 2023 to March 2024. Now, in March 2024, it's kind of like leveling out. We see the rate is not going as fast, as steep as what it has been in the past. And now, as I said, I'm going to show you what it actually looks like from a historical standpoint to be in a buyer's market. Now, usually what we do is we calculate what's called an absorption rate. So we calculate the number of sold which is shown in this green 1,568. And don't forget, this is December 2010. So quite some time ago that there were 1,568 units sold, the number of homes sold. And then the inventory was 6,539. So you can see the difference between, 15 years ago to compared to what it is right now. You can see what it looks like now, where, we only have 800, close to 800 sales. And then the inventory on the market is 1,571. So now if we want to calculate the absorption rate to see if it's a seller's market, a neutral market, or a buyer's market, what we would do is we would take the number of sales and then we would divide it by the inventory. So the higher that rate, the closer it is to a seller's market. The lower the rate, the closer it is to a buyer's market. And which makes sense, because if you take the number of sales, if houses are flying off the shelf, we're selling them like crazy, then it's a seller's market, right? So the higher the sales number, 800, whatever, right here, 813 divided by the inventory, if there's not a lot of inventory, it's more of a seller's market compared to like what we saw for a buyer's market, where we have, we have tons and tons and tons of inventory, not too many sales comparatively, and the rate is lower, then it indicates a buyer's market. So anyway, hope this helps. Thanks very much for watching. And my contact, if you want to see any of this data, I can do this data so easily. I just get the data off of our local MLS, and I can do this for a different county. I can do it for, a neighborhood. I can do it for a certain price point. Maybe like a certain area of the county. So anyway, contact me if you'd like to see any of this data. Be more than happy to do it for you. And thanks very much for watching, and have a great day.